Hello and welcome to Smaulgld. In case you missed it, top gold, silver, and crypto stories for the week ended February 11, 2018. The stock market is, like the dollar, a U.S. strategic asset. The stock market did have a big fall. We're going to talk about what that means. Will the U.S. economy diverge from the stock market? Stocks collapse, cryptos plummet, and gold and silver fall modestly during the week. Does the stock market decline pave the way for more share buybacks with repatriated cash? Or was that timed for that? SEC and CFTC gave Senate testimony favorable to cryptocurrencies, and the CFTC head revealed that not his daughter, his niece, is a hodler. Banks begin the banning of the use of credit cards to buy cryptocurrencies. The Indian government to accept gold as an asset class. Report shows that China is once again the largest consumer of gold in the world. There's another massive silver reserve find we're going to talk about. And there's some other stunning gold and silver finds, and we're talking about not reserves, but ancient gold and silver and smuggled gold and silver. And the gold bucket heist thief tells his story. If you recall the story of a guy who just walked by a Brinks truck, picked up a bucket of what they said was gold flake. Indeed, it wasn't gold flake. We're going to learn about that story. So let's get right to the stories. Gold, silver, and crypto stories of the week. By the way, there's a new update on how Smaulgld will be delivering the content to you, so please check out the video on the YouTube channel or on this blog post. Now, gold and silver. When the first big collapse early in the week on Monday happened, gold and silver did rise, especially gold, but they did give up their gains during the week. But interestingly enough, they did hold their value. While they did fall on the week, they did not fall as precipitously as the stock market. So we were covering that during the week. A little disappointing to see that they didn't finish higher or even flat. They actually finished lower. Gold closed the week at $13.15, down about $16 from the week before, down 1.2%. And silver fell to $16.33, or down 1.5% from $16.58. The gold-silver ratio as a result, above 80 to 1. There's your long-term silver ratio chart. I'm not going to go into that this week. Now, also, I was on Kennedy Financial. One of the questions was, and you can check it out, my answer was why Smaulgld roasts the silver and gold pumpers. Please check that out on the Smaulgld website over at Kennedy Financials. Just a quick point, this is something I mentioned a couple of weeks ago, that at some point Trump may be making a comeback. It looks like even CN is considering that possibility. Now, Moronica, which is normally part, or had been part of, in case you missed it, top gold and silver and crypto stories for the week ended, is now its separate weekly podcast. So this week, you can go check it out. There's 20 minutes of idiocy and analysis and humor, so go check that out. Also, what I didn't get to include in Moronica was the fact that Trump came out in favor of due process, which I would imagine any sane and rational person would be in favor of. But of course, the mainstream media went nuts, saying Trump is unhinged. And of course, if Trump is for due process, they are against it. Now, as to the memo and all the things that happened with the FISA memo, the Republican memo, the Democratic memo, that I also covered separately in a video. You can check that out at the Smaulgld website or on the Smaulgld YouTube channel. Let's talk about the dollar. The dollar had been collapsing, or collapsing is, I guess, a very strong term, for the last 3, 4, 6 months. And the dollar went up, interesting enough, because stock market went down, but the dollar did rise. And here's a good chart from Zero Hedge. And it was the dollar later in the week, as I mentioned, that was getting the safe haven bid, not gold and silver, which is somewhat telling. And that, in some ways, it's not, because the global financial system is based on dollars. It's not based on gold. It's certainly not based on silver. And the dollar has powerful allies, and gold does not. And it says here, this was not my words, but this is Market Watch. Gold gets only mild haven lift from stock drubbing. This is early in the week. And indeed, by the end of the week, it had actually gone down. And they're noting that it had gone down. Now, as to what's going to happen, our headline story, we have noted over the last 7, 8 years that the stock market has risen. Anyone who's been following alternative media has rightfully pointed out that, and even in the mainstream media, that the stock market has risen far in excess of economic growth, is way ahead of itself. And part of that, I believe, is because they boost the stock market. They know ever since Alan Greenspan that the stock market is one of the most important U.S. assets, including up there with the U.S. dollar, because that's how they get to create a standard of living by boosting stock prices. They know if they have a population that invests in stocks, they also know they can make them richer. They boost the stock market. They also know that foreigners will invest in the stock market. It keeps those dollars and the value coming to the United States. If you think about it, especially in the past 20, 30 years, where else can you raise capital for companies that aren't going to make any money, will never make any money, and still manage to take them public with multi-billion-dollar valuations and keep them there? Only in the United States do you have that type of power, and that is a very important asset to have. And Greenspan recognized this when he became the chairman of the Federal Reserve in 1987. Within weeks of his appointment and confirmation by the Senate in August 1987, the stock market crashed. And what was the immediate reaction of Alan Greenspan? It wasn't, let's see what happens. It was, the Fed stands ready, willing, and able to inject liquidity. Echoes what we heard 30 years later from Mario Draghi, do whatever it takes. So that was a realization that the stock market was important. A booming stock market is important. And really, since 1987, the stock market has not ever really gone down. It used to be, for those of you old enough to remember, you just go back and look at the charts, the stock market would have years of negative performance. That is no longer happening. Whether it's the Exchange Stabilization Fund, the Fed injecting liquidity, QE, whatever it is has just not been allowed to happen. Now, the question is, the stock market has fallen. What would be the natural reaction? When you have Powell in, Yellen is out, is he going to try to boost the stock market back up? And a lot of people just assume that past this prologue and that the Fed will just jump in and boost the stock market back up. I'm not quite so convinced. I had thought when Trump came in that he would be more focused on the economy, because his political strength is in the heartland, is in where the people lost their jobs. It's in bringing jobs back to the United States and not necessarily boosting the stock market, which is really the preserve of the coastal elites. And therefore, if the stock market went down, he wouldn't give a hoot as much as he would, because he can always say the economy's doing well, he's bringing jobs back, tax cuts, and so on. Well, we had something a little strange, was unanticipated to me. The stock market soared and stayed high during the first 11 months of Trump's presidency. And he took the bait and praised it to the hilt, that somehow all this was a result of his fine leadership and so on. Well, when the stock market collapsed, Trump is out now saying that the stock market doesn't understand. The stock market is wrong, even though he liked what the stock market was doing when it was going up. Now that it's going down, he's saying that the stock market is discounting all the fine and wonderful things in the economy. Now, many commentators are saying that the stock market's going to head back up. I think, and the Fed has been saying that they're going to raise rates 3 or 4 times this year, and a lot of people think, well, that wouldn't make any sense, because then the stock market wouldn't rise, the stock market would not go as high, and so on. I think they actually may go ahead, because at some point they do have to raise interest rates. At some point they can't keep boosting the stock market. And I also think that if the stock market muddles along, maybe they boost it a bit through the Exchange Stabilization Fund, or maybe they don't raise rates 4 times, they raise them twice, it still puts the U.S. at a overall economic advantage to have rising interest rates, higher interest rates, where everyone else is, all the other countries are printing money. It creates a stronger dollar, and if they could do it without really damaging the stock market, they don't have to have a booming stock market. I think maybe now is the time to do it, and I'm sure Trump will jump all over it and talk about the gains in the real economy versus the stock market gains, which will be modest probably going forward. I don't expect them to really boost the stock market. In any event, I think the U.S. can gain a first mover advantage, and I think they already have, by becoming the, quote, prudent central bank, by raising rates and possibly even winding down their balance sheets, while all the other countries, especially China, are now more addicted to debt than ever, at least as to how to get their economy going. Now, the United States is addicted to debt as to how it can redistribute wealth to its citizens and make good on its unfunded liabilities. But China is addicted to debt, cannot really grow its economy without the debt, and this could be one way of gaining an upper hand on China. There's another thing, this petrodollar, this petro yuan, or whatever they're talking about, is going to come out. As we said all along, there's not going to be a gold-backed yuan. There's not going to be a gold exchangeable. They are definitely talking about now finally launching the yuan-denominated oil's futures contract. And then the story has been, since they've given up on the first two, that it's going to be gold-backed or gold convertible, that these oil traders will take their yuan and go and buy gold. I don't think so. They can already buy gold if they want with their worthless dollar. So we'll see what happens there, but I'm not really thinking there's going to be much of a big deal. And by the way, the idea that it's going to harm the petrodollar is less important today as it is as an underpinning for the dollar, because countries hold dollars for far more reasons than they do just to buy oil. Remember, the original reason for the petrodollar was to make sure that foreign countries needed to hold dollars because Saudi Arabia and other oil-producing nations were going to only accept dollars for payment for their oil and only price their oil in dollars. Well, that's changed. By the way, the United States is now a larger producer of oil than Saudi Arabia and is becoming one of the world's largest oil exporters, even to China. So at some point, you can say that as I wrote in an article a week or two ago, and actually wrote this about a year ago, but just followed up on it, that the petrodollar can now be backed by U.S. oil. But I actually think that the oil backing is far less important today. The main reason that countries have dollars is not because they need them to buy oil. Oil is only 10, maybe 12% of international trade. They hold them because everyone else holds them. It's the most liquid asset on the planet. But if you do want to make the petrodollar argument that Saudi Arabia is going to break ranks, Saudi Arabia is no longer the dominant player in oil. Indeed, the United States is becoming one of the most dominant players. Okay, now cryptos collapsed during the week. Now, the difference with cryptos and stocks. Stocks you can look at and say, well, they're overvalued. Cryptos, you could say that at any point, why is a Bitcoin, why is a Litecoin, why is anything worth what it is? You can argue it's worth zero. You can argue it's worth to the moon. You really can't find any real fundamentals. You can use hash rate and being pulled, but none of that stuff really you can trust as a rational way of evaluating or giving value to cryptocurrencies. So none of the news that came out, a lot of it was like scare stuff, like this government's going to do that, it's going to do this. And so none of it has been damaging the fundamentals, but the fundamentals are based on sentiment. Well, sentiment is actually what drives the fundamentals. There's a lot of negative sentiment on cryptocurrencies at the moment, and also, they went up beyond anything you could possibly imagine. Now they've taken a fall back. So at one point, we were getting close to $1 trillion in market cap for all the various cryptocurrencies, and now that number is down about 400 billion. But the stocks, though, did collapse during the week. They made a couple of attempts to rebound, but they went and ended the day or the week lower. Okay, in Litecoin news, Litecoin has some positive and some negative news on the week. They're talking about Lite Pay is going to launch. It'll be something similar to BitPay, where merchants can sign up and use or accept Litecoin as part of their payment acceptance. They're also saying that ATMs that use Bitcoin, 41% now support Litecoin. So Litecoin is definitely piggybacking off of the Bitcoin success. And here's Charlie Lee talking about payment processing for Litecoin. It's going to get a lot easier for merchants to accept Litecoin, and he lists the payment processors there. We're talking about Lite Pay. Here's Yahoo financing. Can Bitcoin survive the Litecoin moment? Some people are catching on to the idea that Litecoin is cheaper and faster to use at the moment than Bitcoin, and the price certainly doesn't reflect that Litecoin is anywhere near as valued as Bitcoin. There's more Satoshi Lite talking about Lite Pay and so on. There's a list of the companies that are using can use Litecoin as a payment method. And more stories on Litecoin. Here you go, Forbes. What is Litecoin? But now they're saying Litecoin is a surprise favorite with criminals. Now, it's interesting these stories come out. Of course it is, because if, as I just mentioned, Litecoin is cheaper and easier and faster to use, that just means that if people are going to use it as a currency, versus Bitcoin, well, they're going to pick Litecoin because it's cheaper, faster, and easier to use. So everyone's going to use it, or not everyone, but people are going to be more likely to use the coin that's cheaper, faster, and easier to use than the one that's slower and more expensive. And of course, criminals are no different. So I added here, Litecoin is a surprise. Well, the headline was Litecoin is a surprise favorite with criminals, and I put and hodlers. And they're saying criminals are ditching Bitcoin for Litecoin and Dash. Coinbase, surprise, launched a PayPal-like plugin for Ethereum during the week. That was quite interesting. They didn't really announce anything. It just showed up, and somebody had noticed that it had indeed showed up. There is John McAfee on Bitcoin. He's still, even in the crash, doubling down on his bet where he's going to eat apart his anatomy if it doesn't reach $1 million in less than 2 years. There he is again. The question is, well, I'm not going to question anything. Let's see what else we have. So Coinbase is working on SegWit, and Bitcoin ATM installations are still, quote, skyrocketing even during the market correction. I think that there's a certain percentage of people that are involved in cryptocurrencies that have been involved forever that have not in any way, shape, or form lost any faith. And I think that's what really provides a support and for the Bitcoin price, and why it always comes back, or has to this date always come back, because of the core people that are believers in it. And I believe there's a larger number of core believers. There's also a larger number of people who got involved and don't believe in it at all now after they've lost more than half their money. But as you can see during the week, Bitcoin dropped below 6,000. It was at 5,900. I was just tweeting out the price, 6,300. Then it was 6,800. Went to 72, 74. I think now it's like 8,200. Yeah, it went to 8,300. Went as high as 80. I think it even reached 9,000. So Bitcoin, very volatile, goes up and down. You know, it's over. We're never coming back. And then next thing you know, it's going to the moon. So, and then you see the people that are Bitcoin bashers like Peter Schiff on the way down saying it's going to zero, and then silence when the thing rebounds $2,600. Goldman Sachs saying most cryptos will crash to zero. That's true. A lot of them are just useless ICOs. Nearly 20% of people who own cryptocurrencies on Bitcoin went into debt to buy it. Now that's 20% of people. That's a misleading statistic. I'm sure it's not 20% of people. I'm sure it's 20% of people, but not 20% of the funds. That includes everyone who took a flyer on buying Bitcoin after Thanksgiving when they had decided it was a good idea, it was going up. Because first of all, you really can't buy much cryptocurrency by a Coinbase, which is the largest one in the United States, exchange in the United States, doesn't allow you to buy that much using a credit card. So a lot of people probably took a flyer, spent a few $100s on the credit card. As we're going to see in a minute, though, the credit card companies are now, not all of them, but some are saying you can't use our credit card to purchase cryptocurrencies. This guy's launching a fund. It's going to be tied to the 5 largest cryptocurrencies. I think those are Bitcoin, Ethereum, Bcash, Ripple, and Litecoin are going to be in his thing. Now, as to crypto regulations, we're not going to cover everything that happened. The big thing that I covered during the week was the SEC and the CFTC's Senate testimony. If you're interested in the details on that, I did an entire video on it. You can check that out on the blog, on the website of Smaulgld.com, or on the YouTube channel. India interview with India's 3 largest exchange. Ban rumors are FUD, they say. So basically, a lot of these talks about banning are fake. They're, for example, the Indian story always was fake. They never said, the guy in the budget meeting never said they were going to eliminate cryptocurrencies. He said he was going to eliminate cryptocurrencies in illegal transactions. So India plans to regulate cryptocurrencies, and as Tyler over at Zero Hedge points out, so no ban. Of course, they're going to regulate cryptocurrencies. They're not going to eliminate them. And I believe that regulation, medium to long term, is good for cryptocurrencies. It basically makes people comfortable that they can invest, thinking that they've got consumer protection, and that also that it's 100% legal, and also that they're in a regulatory framework or in tax framework where they know they can pay their taxes and not have any issues. The point which is interesting with the collective, remember they used to be saying that cryptocurrencies aren't big enough for us to be concerned about. A lot of regulators said that. Central bank people had said that. Well, when the cryptocurrency market cap is now below 300 billion during the week, and it's back up around 450, 500 billion now. But, you know, I was saying perhaps regulators don't have to worry about cryptocurrencies anymore. And it's interesting, we did start to see certain similar comments after I made that comment. This guy, the BIS, wants to clamp down on Bitcoin. But here's somebody here from the ECB saying regulating cryptocurrencies is not exactly very high on our to-do list. Again, they're looking at it saying it's not, we don't need to worry about it at this time. India's tax department issues notice to the 100,000 crypto investors who haven't paid their taxes. No surprise there. There's no reason to shy away from Bitcoin. There's many reasons to shy away from it, but not because you think they're going to implement taxes on them, because why wouldn't they? That would make sense. That's like saying I'm not going to buy stocks because I'd have to pay tax on it. You should take a look at it and say, should I buy this stock? Maybe, maybe not. But having to pay tax on it probably shouldn't be the reason why you wouldn't buy it. Too big to fail banks. That's what I was talking about. Lloyd's Banks bans Bitcoin purchases on its credit cards. Now, people get excited about this and they say, oh, this is bad, this is wrong. I say, well, Lloyd's banning what you can buy with their credit. It's not your credit. People say, it's my credit, I can buy what I want with it. No, if Lloyd's or any other credit card issuer is concerned that you're not going to be able to pay it back, or you're going to go bankrupt as a result of losing all your money in cryptocurrencies, maybe that's not a bad thing for them to be able to say you shouldn't buy on your credit card. Paul Joseph Fulton says, Lloyd's deciding what you can legally buy with your own money. Very dodgy precedent to set. I don't know if it's dodgy. Maybe it's well dodgy. No, it's not dodgy at all. They're banning what you could buy with their credit. You could still buy with your debit card. Now, it'd be different if a bank said you can't use your funds in your bank to buy cryptocurrencies, and I would think that would be very dodgy. All right, that's it on the credit cards. I believe just some discussion here about that. You can think about that and leave comments below whether you think it's a draconian measure or whether it's a sensible measure or whether it's not important at all. But here you go, ECB. Merce says virtual currencies need global regulation. Good luck with that. I mean, global regulation is very difficult, especially for something that really so small, as the other ECB representative said. It's not on the top of our to-do list. And France and Germany are also calling now for G20 action on cryptocurrency. Remember, G20 isn't the whole world, so again, good luck with the countries that don't join, or good luck even trying to get all 20 countries to agree on some type of regulation. Here's a New York Fed blog post. Bitcoin may not be worth all the hoopla. Again, to my point, it's not that big, it's small. Why do they need to spend time trying to regulate it? Here's a World Bank chief says cryptocurrencies are Ponzi schemes. You got people all over the map here of what their views are in Bitcoin, what they want to do about it, what they don't want to do it. But this was a story, it was interesting. This one, the ECB official said Bitcoin is like a gold rush with no gold. Definitely against, it says warned against Bitcoin. But I read the article. The guy also said if somebody wants to play the casino, let him do it. So they weren't saying they wanted to ban anything. They were just basically saying they want people to be aware of what's going on. Now for gold, Indian government gets ready to accept gold as an asset class. It's probably a positive thing. The finance minister said the government will establish a system of consumer-friendly and trade-efficient and regulated gold exchanges. Of course, part and parcel of this means digital gold and also gold certificates. So it's not like they're embracing the local coin shop and the local seller or jeweler of selling gold under the radar. Indian budget 2018, gold sales may go up in rural areas. So I'm not sure I believe that China is the top gold consumer in the world. I think it's just by that measure. I believe that if it is, India is a close second. Or if it's not, I believe India may be buying more gold. And there you go. China tops gold consumption table for the 5th consecutive year. Could be, maybe not, but they both see. Look, consumption of gold in China hit 1,089 tons in 2017, the highest figure in the world for the 5th consecutive year. Now, think about that total. That's 1,089 tons. The People's Bank of China lists that it has just 1,842 tons. So that's just the People's Bank of China. It looks like Chinese people just themselves on their own buying about 1,000 tons a year. So 5 years, do your math, it's 5,000 tons. That's more than the People's Bank of China. So people always say China's gold. They cite People's Bank of China, then say they're lying. No, they're not lying. Possibly they are lying. But basically, the People's Bank of China is not the only repository for gold in the world. Now, Indian January gold imports plunged to 17th month low, and so did silver in India. We'll get those numbers out later in the month. Now, Russian international reserves climbed to about 450 billion. That's up just 50 billion short of pre-sanctions high. Keep in mind that of those 450 billion in foreign reserves that Russia holds, only 76 billion of that is in gold, 105 billion is in U.S. treasuries, and more of that is also in U.S. dollars. Global gold mine supply plateaued in 2017 as China output fell 9%. And remember, China is the world's largest gold producer. So if their gold production goes down, world global production probably goes down. However, Chinese gold production doesn't leave China, so it doesn't really impact the rest of the world. Same with Russia. Russia's gold, most of it goes to their own reserve position, and the stuff that doesn't goes to China. So if you're looking for an impact on the rest of the world, Chinese and Russian gold stay within China and Russia. Indian gold demand for 2018 forecast as high as 800 tons, but that's going to be below the 10-year average. I don't know how they know that in January, so we're just going to, I track that every month, so we'll see where Indian gold demand goes, import as represented by imports in 2018. Now, this was interesting. When UAA World Gold Council says that gold jewelry demand was at a 20-year low. Surprised to see gold demand in UAE going down. Now, here's a story that says when the going gets tough, Germans buy Aussie gold. They're doing it right now. They are buying a lot of gold from they say from the Perth Mint, but the real gold demand or the large numbers are coming from, they don't call them ETFs, they call them something like that, the paper gold, where they buy it through an electronic account. There's a gold environmental damage. And here's what I'm talking about, gold ETFs. This is the World Gold Council saying that there was a large 26 tons worth of gold bought in January. But again, that's gold, quote, bought. But that's gold that's bought in the form of ETFs. And we've covered these stories already. There's a picture of the UAE looking. Imagine you go into a store, you see all those gold bangles, and you don't have those kind of stores. At least I don't know where they are. I haven't seen them in the United States. Gold demand picks up in Asia. Now, here's something in U.S. Forest Service just approved exploratory gold and silver mining near Mount St. Helens. So this is on U.S. lands. It's a Canadian-based mining company. I don't think you would have seen this type of approval during the Obama administration. Bitcoin and gold. There's still people out there trying to say that Bitcoin is the new gold. It says investors are trading gold in for Bitcoin. EPA administrator visits Nevada silver gold mine, and they're still, obviously, it's not laissez-faire with the gold mining and silver mining in the United States. Gold and silver mining do environmental damage, and of course there's always issues with that. Indian silver imports, as we mentioned, plunged to 14-year low, 14-month low, but we'll see how they go for the rest of the year. Here's one of your stories, how China and Hong Kong currencies were shaped by the Spanish type of dollar. It's an interesting story. You can check that out. Now, we know we have goldpumper.com. We got bitcoinpumper.com. This is one of the Winklevoss twins going on TV. And again, he's using the gold argument. Well, Bitcoin, since it is gold, and go with that assumption, and that the gold market is 40 trillion, and therefore Bitcoin should grow to the same, if not bigger, than the gold market, and therefore Bitcoin should be worth 40 times the price. Strangely, there are a lot of people buy that line of thinking, so that could help drive the price higher if people actually they do. I mean, you see in mainstream media all the time, people comparing with a straight face that Bitcoin is gold or digital gold or something like that. But of course, we do have our gold pumper stories for the week. Alert, alert, shock the world. Here, massive secular bull market just got started. This is going to send gold and silver prices skyrocketing. Here, 2018 will be the last year to buy gold and silver at current levels. Probably, because it'd probably go up a little, go down a little. Never ends with these people. They never, ever, every day it's ready to skyrocket, shock the world. Well, here's the story. It says China finally ends its 25-year wait as yuan oil futures to start trading, I think sometime in March. But remember, this is not backed by gold. And we have seen for this BS story about gold-backed yuan game changer. There is no gold-backed yuan. It's just a 25-year wait for a yuan oil's futures contract. It's just a point about the manipulation. They always say manipulation. That's why gold and silver go down. There's no doubt about that. But But if they can manipulate the entire stock market, which is very true, of course they can manipulate a very tiny silver market. It's just something to be aware of. Oh, by the way, also with this story about, well, J.P. Morgan, they're collecting all this silver. The amount of that silver is not worth very much. It's worth $5 or $6 billion. The silver that's in the COMEX warehouse, we don't even know if it's theirs. But let's say it is theirs, and let's say J.P. Morgan is accumulating silver for their own account. They've got that silver. Forget the Silver Eagle story. There's no proof to that at all. But there is a large amount that is listed in their COMEX-approved vault, and everyone's thinking, well, that's because they know what's coming, and they're going to be sitting on a stockpile of silver when silver goes to some ridiculous price. No, maybe they're just holding on to that as acting as agents for the U.S. government. So if they have to sell physical silver into the market, they've got a ready-made stockpile. Just something to consider. The elites losing control, COMEX default, silver shortage, sovereign size, all that stuff. Now, let's look at some of the found gold. There's a great story. Prehistoric Balkans were faking gold 6,500 years ago. So they actually find evidence of fake gold. They were scammers back then. Interesting story. Bacteria Digest says that these toxic, these bacteria, they digest toxic metals and they poop out little gold. Very interesting. Here's a story where Scotland Silver is taken on tour. We'll take a look at that. These are all links at the Smaulgld, on the Smaulgld website. Now, here's the story of the week for finding silver. Whoops. It says here that Russia has found a large silver hoard. Now, remember, we had a couple of weeks ago talked about a large, massive silver hoard found in the outback of China. So a lot of silver apparently coming online. You can click there and read the details on that story. Now this guy, here's the story of the week. He's a free man. A year or so ago, he walked outside. He saw a bucket of what looked like gold and just picked it up and left. And he went all the way to, I think it's Ecuador is where he went. But anyway, a very interesting story. I'm not going to go through the details. I urge you to click on it. There's a 6-minute video on what was actually in here. There was not gold flake in this bucket. There was something else. It was still gold, but it wasn't gold flake. And a very interesting story. He had a girlfriend. She was going to meet him. And very, very interesting story. Smuggled and seized gold. We get this all the time. Most of these smuggle stories, they come out of India, Bangladesh. So they're always trying to smuggle gold over there. We talked about how they smuggle in phones. Another trick they do is one guy gets on the plane and he knows that the plane is going to be going somewhere else internally in Japan. So he gets on, let's say in India, with some gold on the plane. He sticks it in the bathroom, and then he gets off the plane. He doesn't have to declare anything. He's landed in Japan. Then his buddy gets on in Japan for a flight where that plane is now going to go, landed in Tokyo. It's going to go somewhere else in Japan. He then goes, collects the gold out of the bathroom, and then he doesn't have to worry about customs. When he gets off the plane, here's more gold smuggling. Now China, we can't leave before we sign off without talking about China's vision of peace and harmony through sound money, gold, and trade. Now, what's happening here? Well, China is definitely clamping down on cryptocurrencies. No surprise there. But Chinese central bank reaffirms prudent neutral monetary policy in 2018, and then soon after that, they're injecting liquidity into the market. Oh, here's a positive story for China. China urges Cambodia to use yuan in bilateral trade, and apparently they agreed to do so. So China will be working with Cambodia in yuan. Now, Chinese regulators urging domestic brokerages to ask investors to add to their collateral when share prices drop instead of closing out the positions, according to people. And anything to keep the stock market boosted and going higher. China sends a U.S. to the United States demand for compensation on imposing tariffs on imported solar panels. So we got a trade war building. We have evidence that the Chinese are now increasing their reserves, and this increase here, almost all of it is in the form of adding U.S. Treasuries. We'll get the report out later this week on the December numbers to see whether China is continuing to add U.S. Treasuries to her reserves. But the yuan had a big crash after huge China trade surplus. Again, China is not in any position to go out and crush the dollar. The yuan is very subject to devaluation. And we are seeing a little shakiness going on right now, not only in the Chinese market, stock market, but also with the the Chinese yuan. And of course, then China releases nearly 2 trillion yuan in temporary liquidity. So China is definitely rocky, always has been, and as I mentioned, they are totally dependent on debt. But here's an interesting story. U.S. largest natural gas exporter announces huge deal with China. I was making the point that the United States is a large oil exporter, and China is a big customer. Well, they're now also a large customer of United States natural gas. Very important story there. There's the Chinese central bank releasing 2 trillion in yuan in liquidity, anything to boost the market. Venezuela, 99.6% devaluation. So Venezuela's in a lot of trouble. I don't understand how anyone thinks that petro, whatever they want to call it, is somehow a threat to the dollar. Who is going to take the petro? First of all, the Venezuelan Congress said that it is illegal. Second of all, you have no guarantees. They can say it's backed by this or backed by oil or backed by gold. Unless you've got an ironclad redemption feature on that, it's not backed by anything. The Venezuelan government can go bankrupt and you get nothing. The Venezuelan government can go out of business. They can get taken over. I mean, there's no reason why anyone would think that petro is worth anything, why anyone would even think of taking it and the risk in taking that. And there you go, Mad Max, violence stalks Venezuela's lawless roads. And quickly to the end, Fed's Bullard says job market strength may not augur higher inflation. Fed Evans says no rate hikes needed before mid-2018. So they're still talking rate hikes, maybe a little bit of a delay. Dudley says he supports a March rate hike if U.S. economy remains strong. So this is back to my point in the beginning. If the United States economy is doing well, they may decide to continue to raise rates, even if it adversely affects the stock market. But remember, they used to say the Fed could never raise rates. Here's Kaplan saying the Fed's likely to continue to raise rates. So I believe that, you're going to have some rate hikes. And I've said in 2014-15 the Fed would raise rates. You had people out there saying the Fed could never raise rates. And then when they did raise rates, they said they didn't really. And they're not going to raise them anymore. The next thing they're going to do is lower them. And then they're going to go negative. And then they're going to do QE4. And then when they did raise them, they started saying, well, they only raised them 3 times. And everybody else thought they were going to raise them 6 times. So I'm more right than they were. The Fed is raising rates. That's factual. And I guess people just need to admit that. But on the other end of the story, Bank of Japan here, Kuroda's talking about need to maintain ultra loose policy. ECB may continue to buy bonds. And the U.S. economy is still doing well. The Atlanta Fed says the GDP should be 5.4% in the first quarter. Consumer confidence up to 13-year high. And jobless claims are at a 14-year low. Thank you very much for listening.